Hello everyone. Today we will be solving two questions of Goodwill. One I'll solve on the screen and second you'll try on your own. So first take out question number 6, that will do first, then you'll try question 5 on your own. So question 6 is a complicated one where we have to find average future maintainable profits also and capital employed also. So there's a full-fledged question, mark it as important question. Or if you look at question number 6. The following is the financial position of Galaxy Limited as on 31st March 2019. First of all, from the balance sheet, we have to find out by indirect method which assets and liabilities are to be included in calculation of capital employed. So equity shares won't be included, preference shares won't be included, profit and loss account won't be included. They are not external liabilities, they are payable to the owners of the company. Debentures is an external liability that we have to minus. Sundry creditors is an external liability that we have to minus in indirect method. Goodwill itself is not included in the calculation of goodwill. Freehold property is a trading assets. We have to include only trade assets. Plant and machinery is a trade asset. Less depreciation means 1,75,000 is after deducting depreciation. Stock is a trade asset. Debtors are trade assets. Bank are trade assets. Okay. This all money is used and employed in business. Now important thing is profit after tax. What you are given is profit after tax for the year 16 to 17, 17 to 18 and 18 to 19. 1,43,000 is for 16 to 17, 222,502 is for 17 to 18 and 165,840 is for 18 to 19. Now we have discussed, if you all remember as a note, that we will always be making adjustments in which profits before tax. So in this question, first we'll have to find profit before tax. Then only we can make the adjustments and then we can work out the profit after tax again by subtracting the tax. Okay. So we always have to start with profit before tax, means if you look at adjustment 3, you'll find 30.9 is tax rate in 16 to 17. 25.75 in 17 to 18 and 26% in 18 to 19. So first we make the workings of, all of you make in a notebook, workings of finding profit before tax, because we have to make all the adjustments in profits before tax. So working note 1, we are finding profits before tax. Now I explain you for 2016 to 17 and then you can even try on your own for 17 to 18 and 18 to 19. See, we suppose that profit before tax is equal to 100. Suppose we assume that profit before tax is equal to 100. Now in 16 to 17 the tax rate is 30.9%. So minus tax of 30.9% on 100 will be 30.9 itself, means profit after tax will be 69.1. 100 minus 30.9, that is 69.1. Now what is the profit after tax already given to you? 1,43,000. Okay, profit after tax already given to you is 1,43,000. So what would be the profit before tax? 1,43,000 cross multiplied by 100 divided by 69.1. Okay, 1,43,000 cross multiplied by 100 and then divided by 69.1. So check it up everyone. 1,43,000 into 100 divided by 69.1. 206,946. 206,946. In the same way we can find for 2017 to 18. You can also pause the video and try on your own and then verify whether your answer is right or not. Here suppose profit before tax is equal to 100. In 17 to 18 the tax rate is 25.75%. So profit after tax will be equal to 74.25. 100 minus 25.75, 74.25. Now for 17 to 18, the profit after tax given is 222,502. 222,502. So what would be the amount of profit before tax? 222,502 into 100 divided by 74.25. Okay, 222,502 into 100 divided by 74.25, that is 299,666. 299 and rounded off to 666. Okay, 665.59 means 6. And same way 2018 and 19, all of you check whether you get it correct or not. Suppose profit before tax is equal to 100 minus tax. Now in 18 to 19 the tax rate is 26%. So profit after tax will be equal to 74. 100 minus 26, 74. Now profit after tax given for 18 to 19, you all can see, is 165,840. 165,840. So what would be the profit before tax? 165,840 cross multiplied by 100 divided by 74. 165,840 into 100 divided by 74. 224,108. 224,108.1 means 108 only. Okay. So this will be profit before tax. Now when we make the adjustments, we'll be making in which amounts? Profit before tax 206,946, 299,666 and 224,108. Now look at the further adjustments. Adjustment 1. Additional information. The market rate of interest on investment is 8%, whereas the rate of risk return on capital employed in business is 2%. That means in the market, everyone in this business is earning 8% interest on the money they have invested in their business. But the risk on capital employed means in our business what we are investing the money, further we have taken more risk than others, and in that risk we expect extra return of 2%. We take more risk, so there should be more return. In short, you will be taking normal rate of return as 8 plus 2, 10%. Other businesses of same category earn 8%, but in our business we have taken more risk and we expect 2% extra return. Means in our business the normal rate of return should be 8 plus 2, that is 10%. The value of freehold property is to be ascertained on the basis of 8% return, and the current rental value is 25,200. Now from this we will get the fair value of the property which we have to take in calculating capital employed. See, understand it. The value of freehold property is to be ascertained on the basis of 8% return, means we must be earning 8% return on our property, and that return is given to you in freehold property. What is the return? Return is in the form of rent. Rent is already given to you 25,200. So we have to find out if we are earning rent of 25,200 on the basis of expectation of 8% return, then what would be the fair value of freehold property? That would be our working note 2. Okay, working note 2, because when we find capital employed, then we have to take fair value of trade assets. Here fair value of freehold property is given to you. So freehold properties fair value we will be finding in working note 2. See, it is given that we have to ascertain the value on the basis of 8% return. Suppose the fair value of freehold property is 100. Now 8% return, 8% return, here the return is nothing but the rent. So 8% return on 100 will be 8 rupees only. If the fair value is 100, then 8% return will be 8 only, the rental value. Now here the rent is given 25,200. Means if the rent or return is 25,200, then what should be the fair value of that property? Okay, then 25,200 into 100 divided by 8. 25,200 into 100 divided by 8. What should be the fair value of that property? 3,15,000. So when we find the trade assets, capital employed, freehold property, we will not take 1,87,500. We will take the value of freehold property as 3,15,000. This is its fair value. Okay, instead of 187,500, we will be taking the value of freehold property in capital employed as 3,15,000. I hope everyone is clear with the calculation of freehold property's fair value. Next, rate of tax we have already considered in finding profit before tax, and we have to subtract that tax again when we find profit after tax. 10% of profits of 17 to 18 referred to above arose from a transaction of non-recurring nature. Non-recurring nature means we have to minus, okay, that profit, and it's because it's a profit we have to minus. Okay, that profit is non-recurring, means not expected again in future. So if you remove that profit, amount of profit from the profits, the profit will decrease, so we will minus. And 10% of 17 to 18 means now we will take 10% of 299,666, that is the profit before tax. Okay, we will take 10% of which profits of 17 to 18? 299,666. Then a provision of 7875 on sundry debtors was made in 17 to 18, which is no longer required. If the provision is no longer required, provision comes in P&L account on debit side. If the provision of 7875 is no longer required, you remove 7875 from P&L account on debit side, the profits will increase. So we will add it in the profits of 17 to 18. I repeat, provision for sundry debtors, that is provision for doubtful debts, bad debts, comes in P&L on debit side, and it is no longer required, so we have to remove that provision. If you remove that provision from P&L account on debit side, 7875 is taken out from the debit side, eliminated from the debit side, then profit will increase. So we will plus in profits of 17 to 18. And also, because it affects sundry debtors, in that situation, here the sundry debtors are given 199,625. Here also we will add 7875, and then we'll take the fair value of debtors. Means 199,625, provision of 7875 is not required. It means we will be able to recover more amount from debtors. So what amount do we expect to recover from debtors? 199,625 plus 7875. That would be taken as the fair value of debtors when we solve the question. Okay, I hope everyone is clear with that. Then next, claim of 4125 against the company is to be provided and adjusted against the profits for the year 18 to 19. 18 to 19 means last year only. Okay, so here also actually this 17 to 18, all of you make it 18 to 19. It is last year only, and because it is last year, then only it will affect the debtors. Because it is last year 18 to 19, then only it will affect the debtors. So here also all of you make the corrections of 17 to 18, 18 to 19. Now claim of 4125 against the company should be provided. Further, we expect that we have to pay some claim of 4125 which is not in this balance sheet. Do you find in this balance sheet any claim? No. So we have to make a provision for this claim of 4125 in the balance sheet. That means if we provide for this claim of 4125, the profit of that year will decrease. So this 4125 of claim we have to minus from the profits of 18 to 19. And also this claim of 4125 is our liability. So when we take external liability, further we will minus a liability of 4125 as a claim. Okay, so this claim will be further subtracted as a liability. Now calculate goodwill as per super profits method at 3 times, as per super profit method, at 3 times the adjusted average super profits of 3 years referred to above. In short, 3 years purchase. 3 times means 3 years purchase. And as per annuity method, the present value of annuity of rupee 1 for 3 years at 10% is 2.487. So we have to multiply directly with 2.487. Ascertain the value of the goodwill of the company, and see, it's clearly given again. The capital employed for the purpose of valuation of goodwill may be taken as on 31st March 2019. That means we have to solve the question taking closing capital employed. So that itself will be taken as average capital employed. Directly goodwill is to be obtained on the basis of closing capital employed. So average is not to be calculated separately. So very first of all, let us find this table and adjusted profits. All of you make the 3 columns. Particulars, then 2000, the profits are given for which years? 16 to 17 onwards. So 3 years, 2016 to 17, 17 to 18, and 18 to 19. All of you pause the video and make this table. Okay, particulars 2016 to 17, 17 to 18, and 18 to 19. I hope you all would have done that. Now be attentive. Very first, the profits we will not take as given in the question. We will make the workings. So we are going to take the profits before tax, which is 206,946. Okay, we have calculated 206,946. So write down profits before tax. What did we get? 206,946. Then for 2017 to 18, same way, what did we get? 299,666. 299,666. And for 18 to 19, what did we get? 224,108. So 224,108. Now from profits before tax, what are adjustments we are supposed to make? Adjustment number 1 is related to normal rate of return. 2, value of freehold property has no effects on the profit. It was just to find the fair value of freehold property. Rate, adjustment 3 was just rate of tax. Adjustment 4, 10% of profits of 17 to 18 referred to of non-recurring nature. So 17 to 18 we have to minus 10% as non-recurring nature, less non-recurring profits. 10% of 17 to 18, so 299,666 into 10%. That comes to minus 29967. Okay, 299,666 into 10% will be 29967. 10% of this will be 29967. Then if you look at adjustment 4 is done. 5, provision of 7875 sundry debtors was made in, as I told you, 18 to 19, which is no longer required. So that we have to plus in 18 to 19. So write add provision on sundry debtors not required. So 18 to 19 we have to add 7875. And because it affects the last year, therefore we have added in debtors also. And same way, a claim of 4125 against the company is to be provided and adjusted against the profits for the year 18 to 19. So that also we have to minus. Claim to be provided. So that we will minus in the last year, that is the amount of 4125. Okay, 4125 we have to minus in the last year. That's it, no other adjustment is given. So adjusted profit before tax can be obtained with this. Write down adjusted profits before tax. That is here first year 16 to 17 as it is 206,946. Now second year 299,666 minus 29967, 269,699, 269,699, and third year 224,108 plus 7,875 minus 4,125, 227,858, 227,858. Okay, from that we will minus the tax, that is tax rate is 30.9%, 25.75%, and 26%. So 30.9% for the first year, 206,946 into 30.9%, 63,946. Here we have to minus 63,946, and then the profit after tax for that year would be, if you minus it, 1,42,999 means 300. Okay, sorry, 1,43,000. 1,42,999.6 means 1,43,000. Then 269,699, here the tax rate is 30.9%, and here the tax rate is 25.75%. So 269,699 into 25.75%, that is 69,447. 69,447, and if you minus that, then you'll get 200,252. 200,252. Okay, that will be adjusted profit after tax, and here it is 26% tax rate last year. So 227,858 into 26%, that is 59,243. Okay, 59,243, and if you minus that, then you'll get 168,615. 168,615. These are the figures of adjusted profits after tax. So this is how we obtained adjusted profits after tax for all the 3 years. Now, in this question, nothing is mentioned whether we have to use simple average or weighted average, so we have to use the logic. Are the profits showing any trend? 1,43,000 to 2 lakh, it is increasing. Then again 1,68,000, it is decreasing. Okay, 1,43,000, 2 lakhs, and then again 1,68,000, it is going down. It is increasing and then going down. There is no trend visible. So here we will be using simple average and not weighted average. Nothing is mentioned in the question, plus the trend is also not visible. So we will be using simple average instead of weighted average. Okay. So all of you write down years 2016 to 17, 17 to 18, and 18 to 19. Adjusted profits what we have obtained are 1,43,000, 2,252, 1,68,615. So 1,43,000 plus 200,252 plus 168,615, that is 511,867. These are the total adjusted profits. Now the formula will be total adjusted profits divided by number of years. So all of you write down average profits. Here we'll be using simple average because trend is not visible. So average profits will be equal to total adjusted profits divided by number of years. Okay, total adjusted profits divided by number of years. Now total adjusted profits are 511,867 divided by number of years are 3. So 511,867 divided by 3, that comes to 170,622. 170,622. What are these? These are, now are you given with any, these are averages done. Next we have to add any future expected income and minus any future expected expense. No such future expected income or expense is given, means this itself is average future maintainable profits. Okay, these itself are average future maintainable profits. So first working of average future maintainable profits is done. Now what we will find is capital employed. Okay, for goodwill, two things are basically required. One is average future maintainable profits and the other is capital employed. So how will we find capital employed? First we will take fair value of all trade assets. First we will take fair value of all trade assets. Now see, what are the trade assets we have discussed one by one. Freehold property, and the fair value is 3,15,000 as we have done in working note 2. So freehold property in bracket working note 2, we have calculated the fair value 3,15,000. Then plant and machinery 1,75,000 as it is. Plant and machinery 1,75,000. Then stock 1,85,000. Stock 1,85,000. Then debtors, we will take 199,625 plus 7,875. So debtors 199,625 plus the provision which was not required, that is 7,875. So do it everyone. 199,625 plus 7,875, 2,07,500. Debtors we will take 2,07,500. Then bank balance of 1,22,500. Bank balance of 1,22,500. So this will give us the fair value of all the trade assets. Do the total. 3,15,000 plus 1,75,000 plus 1,85,000 plus 2,07,500 plus 1,22,500. That comes to 10,05,000. What is this 10,05,000? Fair value of all trade assets, mark it as A. Now from that we have to minus. From that we have to minus. Fair value of all external liabilities. From that we have to minus fair value of all external liabilities. Now from the liabilities side we'll get fair value of all external liabilities. So which are the ones? External liabilities include debentures 1,50,000. Then sundry creditors 119,625. and after sundry creditors, claim of 4125. Okay, claim is a one more new liability that we have come across from the adjustments, that is also to be included. So 1,50,000 plus 119,625 plus 4125, that is 273,750. So this will be treated as B, fair value of all external liabilities. Now capital employed will be A minus B, that is fair value of all trade assets minus fair value of external liabilities. So what did we get? Fair value of all trade assets 10,05,000 minus 273,750. So capital employed is 731,250. And as given in the question, closing capital employed itself is to be taken as average capital employed, and we will solve the question. So now we find the goodwill. First, which method is asked in the question? Two workings are made. First method asked is super profits method. So in super profits method, first of all, we'll find the normal profits which all other businesses would be earning. So super profits method, normal profits is equal to capital employed into normal rate of return. Okay, capital employed into normal rate of return. Now what is the capital employed we obtained? 731,250 into what is the normal rate of return given in adjustment 1 or 2, I think. Adjustment 1, we calculated 8%, 2%, normal rate of return is 10%. So into 10%. 731,250 into 10% is 73125. Now we find the super profits. How much profits we are earning over and above the profits of other businesses. So average future maintainable profits minus average future maintainable profits minus normal profits. So what are the excess profits which we are earning? Average future maintainable profits we have earned as 170,622. Okay, 170,622 minus normal profits are 73125. So 170,622. Okay, 170,622 minus 73125. That is 97497. Super profits are 97497. Now we can find the goodwill by super profits method. The formula is goodwill is equal to super profits into number of years purchase. Okay, super profits into number of years purchase. So super profits we obtained 97497, and in the question it is given 3 times, which we interpreted 3 times means 3 years purchase. So into 3. 97497 into 3, that is 292491. Okay, 292491 is the value of goodwill by super profits method. And second method what is asked in the question is annuity method. So in annuity method we just have to multiply with that present value interest factor what is given in the question. Here goodwill will be equal to super profits into annuity value. Super profits into annuity value. Super profits 97497 multiplied by what is the annuities value given at the bottom in the question? 2.487. So into 2.487. For 3 years it will always be less than 3. So 97497 into 2.487. That comes to 242475. 242475. This is the value of goodwill by annuity method. So I hope everyone is clear with this question, where we have obtained average future maintainable profits also and capital employed also. Plus adjustments were also very good from profit after tax. How did we calculate profit before tax? How did we obtain properties value from rental value? All these are important points from MCQ point of view. Now question number 5, all of you, I'll discuss and you all will try on your own, and the solution of that I will be uploading in the You Will Learn app, so you can directly see whether your solution is right or not. I'll discuss that. The net profit after tax. So this is your homework question and solution will be uploaded in You Will Learn. The net profit after tax, directly after tax, are given for the past years were 60,000, 63,750, 69,000, 78,000 and 88,500. So 1, 2, 3, 4, 5, 5 years profit is given to you. And average trading capital employed in the business 6,50,000 is directly given. So we don't have to find capital employed, it is directly given. The market rate of return on investment is 8%, whereas rate of risk return on capital employed is 2%. So what did we discuss just now? Normal rate of return, you'll take 8 plus 2, that is 10%. Calculate the goodwill on the basis of 5 years purchase of super profits and capitalization of super profits. Annuity method is not a capitalization method is asked. So simply formula super profit upon normal rate of return into 100. And see, it's clearly given use weighted average method applying weights 1 to 5. So you will use weighted average. No adjustments are given in this question, means directly you have to make the table of years, profits, weights, weighted profits straight away. And then weighted average profit, total weighted profits divided by total of weights. That itself will become average future maintainable profits. Then capital employed, you just mentioned, it is directly given. And then you apply the formula of super profit and capitalization method. All information is directly given. Very, very simple question. So all of you try this question completely on your own. Answers you'll find in You Will Learn. That'll be all for this lecture. Bye everyone. Take care. See you in the next lecture.